Hello dear traders. My name is Lena and these are the main trading ideas for the current trading session. First of all, let's discuss the situation with gold, which is trading at $2,410, supported by a weakening dollar. According to data published yesterday, the Consumer Price Index in the US in annual terms fell from 3.3% to 3% with a forecast of 3.1%, while core inflation adjusted from 3.4% to 3.3%. Given the significant slowdown in gross domestic product and the cooling labor market, the likelihood of a 25 basis point cut in the U.S. key rate after the release of the inflation report has increased significantly. According to the FayWatch tool, it now exceeds 92%. Against this background, the dollar will most likely continue to decline, which will provide additional support to gold, which has an inverse correlation with the U.S. currency and Treasury yields. Next, pound against the dollar. The pair is testing the level of 1.29. Investors are focusing on the publication of May data on gross domestic product, which turned out to be significantly better than expected. On a monthly basis, the figure increased by 0.4% against preliminary estimates of 0.2%, and on an annual basis, by 1.4% instead of 1.2%. According to analysts, economic growth reduces the likelihood of monetary easing beginning in August. Members of the regulator's board also hint at the possibility of maintaining interest rates at current levels for a longer period. Thus, the day before, Bank of England Representative Catherine Mann and Chief Economist Hugh Pill noted still high inflation in England against the backdrop of a significant increase in wages, which makes a monetary policy adjustment unlikely. Against this background, the growth of the pound may continue. And finally, Australian currency against US dollar. The pair is trading at 0.677. Yesterday, July data on consumer inflation expectations for the next 12 months from the Melbourne Institute was published. The figure rose to 4.3% and remained well above the Reserve Bank of Australia's target range of 2 to 3%. This statistic reduces the likelihood of the Australian regulator cutting interest rates during the year. Moreover, analysts still admit that the regulator may raise the interest rate at one of the next meetings. Considering the above, the Australian currency retains the potential for growth, especially against the backdrop of the weakening position of its American competitor. So, these are the main trading ideas for now. Thank you for your attention and don't forget to subscribe to our YouTube channel.